G'day folks, Jim here from FX Charts, Thursday the 6th of February. Thanks for tuning in. Well, the markets were relatively steady today. There was a bit of action over the US data. The ADP jobs numbers were slightly less than expected, and the services data was slightly better than expected. So we had a nasty spike in either direction from the majors, but everything's ended up pretty much where we started the day, and the market's now on hold really for the ECB and the Bank of England. Neither of whom are expected to change rates today, but we need to look out for the press conference for Mario Draghi. And then we've got the non-farm payrolls tomorrow. So we're going to have a look at the charts. Well, the euro, it had a short-term spike either side of the US data. It having had an earlier low of just under 135, spiked up to 135.55, back down to around the figure, and then it's really done nothing since as we wait for the ECB. Who I don't think are going to do anything really today. They could, the press conference will obviously be closely watched, and we could see Mario Draghi start to talk about the possibility of negative deposit rates. He could, I guess, even cut the refi rate by about 10 to 15 basis points, but I don't think that's likely today. And that we could see some more choppy trade within these 135, 134 and 3/4, 135 and 3/4. Area until the non-farms tomorrow. In the short term, as I say, we've got this sort of 135.75 area, which is the immediate resistance. Above that, the daily cloud and the 100-day moving average, you can see them both here. They're at about 136. On the downside, well, we've got there's good support in that 136 and 3/4, sorry, 134 to 135 and 3/4 area, and then below there's good support around 134.5, this first FIBO level, which comes in ahead of the 133 and 3/4, which I think that's the 200-day moving average, which I think eventually we're going to get to, but at this point in time, it doesn't look like it, and I think we're waiting probably until the non-farms tomorrow for any real direction. Dollar yen. Well, as you can see, we had a bit of a spike lower straight after the ADP number, the weaker than expected jobs number. That didn't last long. We then got a spike to the top side when the services data came out, and we've since just mucked around in the middle. And I think that's probably going to be the game plan for the rest of the day, between 101 and 102, as we wait for the non-farm payrolls. Now, we've got a bit of a triple bottom down here now, and that's going to provide strong support. We've also got the weekly Kijans also down there as well. So 100.70 is going to be pretty strong. If we do go through there, then expect a trip down to the 200-day moving average at about just above 100, which equally that should be very strong. But it'll take the non-farm payrolls to push the dollar lower, if that's going to be the case, to get it down there. On the top side, above 102, we're going to be heading into resistance at around 102.30. We've got the 102.20 is the 200-hour moving average, and 102.30 is this FIBO support. Don't think we're really likely to see either one today, to be honest. And as I say, it'll be the non-farms that push the dollar one way or another. Cable. Well, that's had some weaker than expected services data. Cable's been under pressure. Got down to 162.5. We've got a bit of a double bottom there now. It bounced again as the US dollar weakened a bit after its own data release. The momentum at the moment looks mildly to the top side. Actually, the 1 hours and the 4 hour charts look as though they're trying to recover. So if we could take out this kind of, this 23.6 resistance, which is where 163.5, then I think we could see a trip up to sort of 164 or so. But beyond there today, I don't think we're really going too much higher. We have, of course, got the Bank of England today. No changes expected there. And at the end of the day, I think we'd probably expect some more choppy trading. And I would use 162.5 to 164 as a guide for the day, and keep the powder dry really for the non-farms tomorrow. Dollar Swiss, that's done even less. That's really chopped around. It got down to 90th figure again, found good support down there, back up to 90.60, and we're sitting right in the middle at the moment, going nowhere fast. I wouldn't be involved further out. The dailies are also pretty flat, so I'm pretty unenthused either way really on dollar Swiss at the moment. And once again, I think wait until the non-farms tomorrow. The Aussie, well, that's consolidating its gains. It's making another push to the top side, but there's plenty of resistance at 89.50. We've got the daily cloud is sitting up there, and above that, if we go right out to the monthlies, as I showed you yesterday, we've got the 100-month moving average at 89.70 or so. So the top side's going to be pretty tough to break, and the 4-hour charts are running out of some momentum up here, and they look as though they're going to struggle to the top side a little bit. So I wouldn't be looking for too much today, although we do get the retail sales and the trade data coming out shortly. It's in about an hour's time. And then after that, we've got we've got the NAB business confidence. So there will be a bit of volatility in the Aussie. But I'd be surprised to see 90 cents today ahead of the non-farm payrolls tomorrow. And on the downside, well, 88.70, which we got down to, I'll go back to an hourly chart here. 88.70, that's going to support it. Below there, 88.30. I don't think we're going down there today. The dailies, though, as I've said before, they are looking positive, and I think eventually we are going to get that top side break, but I think we need the 4 hours to unwind a little bit before we do so. Kiwi, well, we saw a spike higher after the better than expected jobs data from New Zealand yesterday. It spent the rest of the day, rest of the session really consolidating those gains. We've just broken to the top side as the Aussie's heading a little bit higher, but I'm not really convinced that we're going too far above 82.5 today. It's a public holiday in New Zealand, and I think most of the liquidity is kind of dried up. Although we do get China back today from their New Year holidays, so there may be a bit more volume in it. On the daily charts, well, it's just choppy. I mean, the indicators are not really sure which way to go, I don't think, and neither am I. It's all pretty difficult to tell with this messy congestion. So I think I'll probably stay out of it. The 100-day moving average is way up here, 82.65. The pivots are around 82, and it looks to me as though sort of 81.30 for the time being is going to be pretty basish for it. So I'd trade that range, but realistically, I'll probably stay out of it today. So that's about it. So as I say, we've got the ECB and the Bank of England coming up. We've got the Aussie data ahead of that. So it could be an interesting session. It could be fairly busy. Keep your stop losses fairly tight, and I think really keep your powder dry for tomorrow's non-farm payrolls. That's about it for today then. We'll leave it at that and talk to you tomorrow. Cheers.